Hello, guys. Good morning to the greatest community in the game. How y'all doing? All right, guys. To kick things off, let's start talking about the pound and the euro. What's been going on with the UK and the EU? So this morning we saw the pound just getting beaten down very quickly on the back of the news that the UK and the EU have failed to really come to any agreement on state aid in trade talks. Now, if you don't know what the state aid issue is and why it's really the largest moot point in the EU-UK trade deal, I've left a link of the article that explains it in the description below. So check that out. Very detailed description. A senior diplomat said that the final agreement will be contingent on the UK withdrawing the internal market bill. Now, this is a move that the UK Prime Minister, Mr. Boris Johnson, has previously rejected. After this, the European Commission President announced that Brussels will be beginning infringement proceedings against the UK for the breach of the withdrawal agreement. And this really caused the pound to slide quite a bit, quite fast. Now, the main reason for the pound sliding like that, like the move we saw, was because of the EU saying that their deal is contingent on the internal market bill. Now, this is sort of the EU setting out the red lines in place for a no-deal Brexit. And this is why we saw the weakness in the pound come in that we saw, right? Recently, prior to this, the market has been pricing in a better outcome for the pound on just pure rumor, pure hope. Remember, guys, buy the rumor, sell the fact. Now, if we see the talks hitting more roadblocks, expect further downside for the pound. But still, as it stands, I'm extremely short on the pound already. All right, then we have positive Australian sentiment. Actually, I should say we have positive Australia, New Zealand, CAD, just everything risk on except for GBP is positive right now. So we can conclude that it's risk on. Now, this is because the U.S. In the U.S., the Democrats and the Republicans are trying to come together to come to a deal for the stimulus, the fiscal stimulus that we've been talking about. Now, this is great for risk sentiment, and the theme I feel like is going to be heavily skewed towards risk on at this point. I'm going to be looking for personally entries on GBP AUD. I see a beautiful entry right now. I was going to say the pullback to my desired area, but as I'm recording, it's pulled back already, so I'm taking a short very soon. Right now, I'm also holding on to a short on the pound yen, a little bit in the negative territory. Now, the only way that I think any of the pound pairs can really stage a major comeback and cause me to close my shorts is if any good comments come out of Michel Barnier downplaying what recently happened, right, with the points that I recently just stated. Until then, I'm short on the pound yen, and I am about to enter pound Aussie. I would say if you all haven't taken any entries yet, since the tone is risk on at the moment, I would be looking for entries on the pound Aussie. Unless the risk tone shifts for some reason, then the pound yen would be a better short. Now, the only way the risk tone can shift in my eyes is if the US can't come to a deal on the fiscal stimulus package. Then the tone would be shifted to a risk off type of tone. But until then, the market is being very optimistic overall. And, we can see that that's being reflected across the board with the dollar weakness, with the risk on currencies rising, with oil, with crude, and with the metals. Now, in the coming future, the biggest driver is going to be the biggest driver for risk sentiment is going to be the U.S. jobless claims. Then we have the U.S. manufacturing data, and then we have the biggest thing that's going to be affecting the risk sentiment, which is the U.S. election developments in terms of overall risk sentiment across the board. Now, my last point, the coronavirus situation in many countries in the EU is growing. And along with that, today's final European manufacturing PMI for September provided valuable insight into the bloc's economic outlook. Now, the report was very encouraging, confirming Europe's manufacturing sector is set for the strongest level of growth in more than 2 years, with a PMI print of 53.7%. So if you're on any European trades, just keep that in mind. Apparently, another thing, my last point, is that there was a glitch in the Tokyo Stock Exchange which forced the JPX, which is sort of like the SPX in America, to announce a half of the, they just shut down the trading day. All right. Now that's all the notable major news. If I see anything else, I will update. But at the time of this recording, that's the only major news that I'm seeing. Have a fantastic day, guys. Take care.